But I will speak around the unsavory culture towards loans, and then about the capacity, and then I'll hand over to my team to talk some more about the other questions. So, yes, I actually don't think, you see, there is this idea that somehow Nigerians are worse people than the people, other members of the globe. I really think that behavior is driven by incentives for the most part. I don't think that we are genetically more predisposed to either crime or to shafting a bank or not to paying loans. I actually don't think so. And one has had the privilege of existing in multiple societies. People are just as bad once you give them once your system and your environment is set up such that they can get away with things. So when you say Nigerians have unsavory culture towards loans, meaning we don't like to pay back loans, I actually even think that culturally, just because we have a layer of one religion and then culture, there's just this element where even the morality compels us to behave a little better than you would in a more liberal society. But the difference between a liberal society like in America, for example, where I became an adult really, and here, is that there are systems that check you. If you don't pay back your loan, it follows you. The next time you want to rent a house, your landlord checks your record and sees that you're owing. The next time you want to buy a car, they check it. Once you buy a house, they check it. Your interest rate continues to rise on account of how indebted or delinquent you have been in the past. We don't have that here. That's all. So I don't even believe, I'm not going to sort of defend Nigerians and say, oh, here's why we are worse. No, we're not even worse. We're actually better. It's just we don't have systems that check our primal behaviors. And where they have systems that check them, credit works. Where they don't have systems that check them, it doesn't. Did I spark controversy? All right. But predatory lending is also the same thing. Predatory lending is the fact that you don't have places that check people against exploiting desperation. We have the Consumer Credit, FCCPC, Federal Consumer, let me not mess up the acronym, Federal Consumer Protection Council. They are on our board as well. So where there are consequences for predatory behavior, then you find that people stop taking advantage of them. You're speaking of what we call the loan apps or loan sharks. So we don't have, I don't think we have a predisposition as Nigerians for bad loan behavior. I just think we don't have systems that check, which is why the laws need to change, and they are changing. We're working very closely with the Office of the Chief of Staff and with the CBN around revamping the legislation and the laws around credit behavior. I think we can fix that. Then I'll talk about the capacity. You must have seen an announcement. Our first budget is 100 billion naira in 2024, same repeated in 2025. Now, that's not the 180 trillion naira that we're looking for. From there, we are also funding our portfolio company, which is the credit guarantee company, so that enable us to do consumer credit guarantees. But and this continues to grow, obviously, with the demand. And the president has made 2 announcements since that time, increasing the funding, instructing. In fact, the first funding we got was actually recovered funds from the EFCC. So what we see is that this can grow or grows as far as we can continue to meet the demands of Nigerians to access better, more affordable credits, and also to be able to deal with things that improve their quality of life now. I will let my ED talk about what qualifies people for credit, a little about social register, and then safeguards. You too.
Okay. My MD spoke a lot about the credit infrastructure. Is one of the key reasons why we're set up. And the essence of it is for everyone to have a score. And a lot of data is being put together, both financial, non-financial, for us to have a proper structural algorithm to score every Nigerian. This is going to legislation so that we can have a central credit bureau for the whole of the country. So whether you are a carpenter or you are MD of an organization, there will be a score for you, and then it will be on your NIN. So there is no hiding place for anyone again. So if I want to rent a house, the landlord can actually ask for my score. And even the money lenders will have access to it. I mean, the normal state money lenders, everybody will have access. Everybody will have to drop their report on it. And so there will be a proper credit score for everyone in Nigeria. And so with that, the banks and even other financial institutions, the microfinance banks, the fintech, more people will be more relaxed to give out loans because there is a score, number one. And then number two, there will be consequences for non-repayment. Although it may not be that predatory like what we have right now, where people are sending SMS messages all around to harass people, but just something subtle. Maybe you want to renew your passport and something is showing that you are owing somewhere. And there is no hiding place. Whether you keep your money in a normal commercial bank or is in a fintech or is in a microfinance bank, there will be access to collect back loan that you have taken and you're not returning. So there will be a proper structure. Everywhere in the whole world, consumer credit actually drives the GDP. That's what my MD was saying. And we need about 180 trillion to actually get to where developed countries are. Who has the money? No. Nobody, no government has that kind of money. So we need all the financial institutions to actually be committed to consumer credit. If the infrastructure is put in place, they will be more relaxed to give out more money, and so credit will be readily accessible. You spoke about the guarantee company that is set up too. With the guarantee company, the financial institutions will also be more relaxed to give, because we'll both sit down and say, okay, this is your portfolio. Okay, let's say mobility is bad. Portfolio mobility for most banks is at so MPL. So sit down, give out more on mobility. Let's look at the portfolio and let's share the risk. You take 60%, we take 40, or 50-50, based on how delinquent those portfolios are. And that's the essence of the guarantee company that was newly set up this June by President Tinubu. So things are getting better. People will be, you can't get away with taking loan and not paying back. There will be consequence for bad behavior. It's because there's no consequence. That's why everybody does whatever they like. Everything will be tracked. Whosoever give us loan will have where they can report the loan that they've given out. And so we can see those who are not paying back. And so they will be tracked. We all have NIN, no hiding place again. Thank you.
There was a question about safeguards, and I think you had asked that earlier. And first, I will start by saying that as of today, CrediCorp has, of the 100,000, over 100,000 beneficiaries across the financial institutions, CrediCorp has 0 MPLs with the financial institutions. And when we look at the financial institutions' records themselves, we don't see anything north of between 1% and 2% that is obviously covered by the interest. Now, the reason for that is that we are not a shot in the arm, we're not an intervention. And it's very deliberate when we're set up not to be an intervention. In fact, we spent quite a bit of time studying People's Bank. I can't confirm or deny whether I was born at that time, but People's Bank is something that we studied very well. To say we're not an interventionist program. We're not like flying helicopters over the country and distributing money. So that's why we believe that credit has to work through the financial system. There's no chance of us succeeding at this without working through the financial system where people are already used to accessing credit, and make sure that the people, so essentially the job of profiling people and understanding their credit worthiness is distributed across the financial system. So people go to their banks, the microfinance, even if they come to us to apply, to seek the credit, they will still have to go through and build a relationship with a financial institution that sustains their credit life beyond the first couple of loans that you get for whether it's your car or solar panel or whatnot. So this is why our work is through the financial system. Now we do have the ability to do by our license direct lending, but we don't even believe in that. We believe in working through the financial system. So that means that the safeguards are there. And our job is, just as we get into the work of sanitizing the credit infrastructure, is such that many more people can scale it while also staying safe. And that we don't just lose money. Because if we lose money, then we're going to wrap up and then you'll be telling stories about us another 20 years as something that happened again that didn't go well. Okay. I think that's most of the questions that we, yes. On one of our, I say something that CrediCorp takes a bit of pride in, I will answer to that, which is the gender balance. Then my head of credit operations is a guy called Sadiq Mohammed. And if he cannot answer the question about Islamic banking, then I have a problem. So I'll have him answer the question about what we are doing for non-interest banking. Yes, this 49%, you don't stumble on 49% women in anything in Nigeria by chance. In a country where the parliament is 2.8% women and there is no female governor. For you to achieve anything that is remotely significant when it comes to targeting women, you have to be extremely deliberate about it. And it's a lot of hard work for you to identify not credit-worthy women, it's just credit-worthy women whose data is known, who are banking, transacting, earning, doing business, working with a financial institution, have a relationship with them. But again, with an organization where the executive committee is 66% women, 2 out of 3 of the exco, and we have been quite deliberate about finding and recruiting, the best talent of women we can find, such that half of management is women. It means that we are nothing if not deliberate about this. And so the question about whether it is a deliberate effort, it is a very deliberate effort and a lot of hard work. But at the end of the day, it's also good business because, like you said, women have shown to be just better credit. And so it ends up being good business. That's how we are able to achieve that. Then I'll just talk a bit about the issue of quality, monitoring quality. The quality of what they use. For example, we're saying we target single-digit lending or very low interest rates if you are getting locally manufactured goods. So, for example, the TVS kekes that are the 1,000 or so per day that they manufacture, and we offtake from that group, is for local manufacturing. Now, of course, we have to have quality checks before we even onboard a partner. And there is a whole industry. I mean, like the quality check that needs to be done is even beyond credit. You need to do quality check to even buy the goods. You have people who vet these manufacturers, who work with them. And of course, if you're working with an Inosin or a Nord, then the problem is not whether Inosin is good for credit purposes, it's just is Inosin good in general for Nigeria. So when we work with the NADDC, like we did, the National Automotive Design and Development Council, they are the ones who do those quality checks. They have the standards as to what is a good vehicle that meets all this. That's their job. It's like the regulator is like asking about medicine and asking NAFDAC. I want to lend people money to buy medicine, for example. I don't need to know what's like the percentage of reagents or paracetamol is in some. I just ask NAFDAC to ensure that we meet those criteria. And that's essentially how we're able to meet those quality checks. So far, we have not had, especially on the locally manufactured automobiles, for example, we've not had any outsized or different feedback than from those who purchased Toyotas from AutoCheck. It's just that those who purchased Toyotas bought them at higher interest rates. And then if you get the locally made one, then interest rate is lower because we want to encourage locally manufactured. All right, Sadiq, tell us about Islamic banking and non-interest banking. All right.
All right, thank you very much. So in our discussions today, the MD has mentioned that we walk through banks to get to the final beneficiaries. And in Nigeria today, we have 5 non-interest banks which are practicing Sharia compliant banking. Out of those 5 non-interest banks, CrediCorp has already onboarded 2 of those non-interest banks, and we are working to bring in the other 2. Now, the final or the 5th non-interest bank was just given its license this year, which means we need to see some performance from them before they meet our criteria. So we had developed our own non-interest banking framework, which allowed us to bring in these non-interest banks because we also understand that there is a portion of Nigerians, I myself included, that want loans that don't have anything to do with interest. Now, these loans are being run by the non-interest banks. They run on Sharia compliant products like the Murabaha, Mudaraba, Wakala, which are strictly Sharia compliant. So we also at CrediCorp have frameworks that deal with this type of products, and we satisfy the needs of Nigerians that are looking for non-interest banking products or loan products to either improve their quality of lives, either through personal use or productive use. We also kicked off, I think, our first cultural reorientation event in Kano, which is in the heart of northern Nigeria, and almost 70% of that population is Muslim, and they practice this non-interest banking. And we are only able to do that because we have the backing and the partnerships that we have been able to establish with non-interest banks. So that's to answer that question. Thank you.
The CEO of CrediCorp, Mr. Nwagwa, is giving us a very comprehensive presentation on CrediCorp. And I was just meeting him for the first time, but I've always heard the belief that one of the most important appointments, one of the most appropriate appointments made by the president is that of the CEO. I said that because his case is a case of a round peg in a round hole, and he has demonstrated that through his presentation. You know that CrediCorp is one of the important, a legacy program of the president that has to do with ensuring that we have credit facility at the moment for civil servants, such that you don't have to carry all the money in this world to buy whatever you want to buy. We've always had that mentality. Even when we go to Europe, we carry that mentality abroad. If I want to buy anything in the UK, even though I have my card, I prefer to bring out cash first, except where they do not want to take cash. So that was a very deep and profound presentation. One enlightening thing for me is the fact that CrediCorp operate within the financial system. They use the financial system as a backbone for what they do. Even though I heard him say that they have a license to also operate like that. But in order to ensure that they cross-check the credit worthiness of who will be beneficiary of this facility, they operate through the bank. And then the question will be, what happens if such a bank fails? We have seen the case of Heritage recently. So you have a lot of work to do in checking the background of the banks that you work with, particularly when you also involve but the microfinance houses too, which has a tendency to want to misbehave. So I want to thank you for your presentation. And through you, I also want to thank the member of your team. I've met Mrs. Olanike Kolawole before, the Executive Director of Operations. We met the other day. So I'd like to thank her for coming. Mr. Sadiq Mohammed, the Head of Credit Operations, thank you. It's Peter Esemwede, the TA to the MD. Thank you. And we hope that going forward, our guys will be having to relate with you, when they have questions here and there. More importantly, there's also Mr. Adebodu Williams and Michael Ojo. Thank you very much for coming. And Alexander too. Oh, it didn't mark it. Alexander Hanere, the Head of Innovation and Strategy. Thank you so much. More importantly, I have to thank our colleague, the members of the State House Press Corps, who just at the snap of our fingers, we call them, and they're here. I hope that you give effective coverage for what has been said by the MD regarding the operations, the essence, and everything pertaining to CrediCorp. I know we can take that to the bank. We can always be sure that you do that. Thank you very much. And my colleague, beginning from Ortega, who is very close to the CrediCorp family, I'd like to thank my colleague, Mr. Alaji Abulaziz. He's so good at his name twice, Abulaziz. And a member of the CrediCorp family, Olanike Laoye. Adenike Laoye, I'd like to thank you for coming. Thank you. So I thank you all, and I hope that the next time we have and our director too, who was always asking the MC, who has abridged the right of some of you by asking more questions than any of you. So I thank you all for coming, and we hope that next time around when we call you, all of you will be here.